Greetings. Now, let's continue my thread about major asset classes and how we could capitalize on them. Now we will cover the biggest market of them all, and which is foreign exchange, aka Forex. Now, probably the term Forex trader is the most popular abbreviation of traders or retail traders in financial markets, as opposed to crypto or stocks, which is like monthly or seasonal flavors depending on what's hot or not. Forex traders are relatively stable niche, and probably ever since we have retail trading on internet with MetaTrader, there is certain breed of people who are deemed themselves as Forex traders. They are consistent. I think we could look at them in early 2000s, like 2003 and 4, when internet became popular, and MetaTrader actually were more common, to times of 2008 and 10 when I just showed up in trading scene. I actually also started my career in financial markets, 50% by value investing, 50% by foreign exchange, as any 18-year-old probably, but that's a different story in my different videos. And even now there are people which are Forex traders, and this is very stable, especially for those who are providing financial services such as brokerage and whatnot for traders. Why? Because I would say profit opportunities for Forex are very consistent, because it produces consistent trends and consistent money making opportunities for those who understand it. Like the other financial products like stocks, they are good when stocks are hot. Prime example was technology stocks with flagship of Tesla in like 2016, 17, 18, 19, and after COVID everyone was flocking into Tesla because it made tenfold increase. Same as at crypto, everyone was crazy in 2017 and in 20 and 21 because it just rised in price spectacularly and people wanted quick money. Then there was like binary options and other nonsense is from time and time again, but with Forex it's stable because there are trends. And in this video I wouldn't be exploring all markets with precise detail. That would be in my next videos with Forex trade, but now we just look at different Forex markets so we have some glimpse about them. For instance, euro against dollar, most widely traded currency, right? About their economics probably we will go separate videos where I talk only about global economies and fundamentals. Now we will have purely trading analysis only for traders. For fundamental long-term ideas we will have different videos. But now let's see. Euro against dollar is widely and most popular, widely held as the most popular trade market, but I wouldn't say it's the best. It's certainly not worse. You could trade it, and there are similar trading opportunities here. And I think every indicator and every chart pattern and everything is built on those pairs, so it's much easier actually to trade and implement all that if you know Forex calculators and leverage tools as to other markets. So we just see simple trend following indicator and 4-hour time frame and see we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trades in span of 2 years. Small trades, but with large leverage you could relatively well capitalize on that. You see 1 move, 2 moves, 3 moves, 5 moves, 6 moves. That was if I showed it a bit faster pace. So this is classical Forex pair with classical trends. Everyone probably has seen it if you have reasonable understanding of financial markets. Nothing interesting. Question is, are all markets the same? Let's see. This is euro against pound. This is currency cross pair. Whether it trends in that manner, you see. I would say let's see a longer time frame. There are no trades here. Probably, I would say where there are trends, there from 0.80. Yes, see, I haven't actually found one decent trend. These 1, 2, 3, 4. These are actually not trends. It's extremely possible to make some money. 0.89, 0.85, 0.85, 0.89. Okay, maybe there was two trends, maybe third in times of COVID, but also very small trend. You have to have like unbelievably high leverage to make actual money on this. Yes, from 0.89 to 0.85. You see, for like 3 years this market is flat. Why? Well, there is something why I should wanted to show you this, because this is currency against currency with similar region and similar types of economies. In those times you wouldn't have any reasonable trends and some parts are useless to trade. Oh, euro against pound against dollar will be the same as euro, so I wouldn't show you it in this video. I will show it in different videos. Let's go for a different point. Let's say Britain pound against Australian dollar. Let's just see if there are some opportunities here. Now let's see something flashy. Here you can see from 0.98 to 0.81. You see what's the magnitude of this trend, what's the magnitude of even those small trends, like which are like nothing. It still moved significantly more than pound against euro, and even for this market these are bad times, but even still we made from 0.8 to 0.88 another trend, which is very high for forex pairs. And then we have a good downtrend in February 22 of course, from 0.89 to 77 in like what, 2 months. And then we had like another similar type of event here from 0.72 to 0.74 to 0.62 when pound was crashing in late September. These are spectacular moves, but here, what's the difference here? These are fundamentally different economies and different structures. So there are currency pairs which are historically trending in huge scale, as it is for instance with GDP against Australian dollar, and there are currency pairs which are essentially flat, like euro against pound. And that's the difference in foreign exchange. You have to understand how structured those markets are, and only then you could understand whether you could trade them or not. And as icing of the cake, I will look at some exotic currency, which is nothing more or less than ruble against dollar. Now this is called exotic currency, and I will show you a very good reason for that. See how what the historical pattern, it fluctuates from 60 to 70 for like how actually I'm not interested in those currencies. I don't trade them, so it's actually new experience for me. So I would say it fluctuates from 72 to 75 for years when nothing actually happens, and then war starts, currency collapses, then central bank intervention comes, and it goes from 128 till 58. So it was flat to 73, it went from 73 to 150, and then from 150 to 53, and then it's flat again to $60, which means this is not, if pound against euro is not particularly profitable, this is actually not tradable. If you are not hedge fund or bank, which is doing a bit different types of things like carry trades or something like that, or financing deals which involves huge quantities of rubles against dollars, where you could simply borrow rubles, buy something and make money on that possible fluctuations. That's how commodity traders make money, or do something like that. Then other retail trading is useless, and you should avoid these markets. And that's my point in this video. If you're not caring much about fundamentals and how world works, but if you simply want to make money on it, I would say you have to understand which currencies you want to trade. There are currencies which are commonly known currencies like euro against dollar and pound against dollar, which is relatively alright to trade. There are currency pairs which is not profitable because they are structured similarly: euro, Swiss franc, pound, or Australian dollar and New Zealand dollar. There are currency pairs which make huge trends. Like it's way more profitable than euro against dollar or pound against dollar, but it's also more riskier. So you have to know risk management and leverage extremely well. Then it's a real gold mine. And there are parts which you should avoid unless you are trying to finance commodity deals or are a large hedge fund which has relatively different kind of profits, such as carry trades, commodity financings, and that. Then what? If you don't know that currency trading is stable money making opportunities for days, weeks, years, and decades, and that's why probably most of the hedge funds trade them. Don't listen what people are saying nonsense about forex risk. No, there are scams there, of course, and there are risks there, of course. There are unscrupulous brokers and whatnot, but you have to know how to understand this market, and then opportunities are endless. And wait for my next video. I will show you all of these different markets and explain them what you can and cannot do there. So stay tuned. Bye.